Folks, we've got a lot to discuss. Let's go ahead and get right to work. Firstly, we need to give an update on the market and plays, and then for the main entree, well, Palantir just reported the most impressive earnings I've seen since we started covering the company in 2020. And not only that, but there's a lot of lines within the earnings report that suggest that Palantir has a lot more upside, and perhaps very, very soon. I'm going to explain to you exactly what's going on with this report and why you need to look between the lines here, because I think a lot of people are ignoring the real story here. On top of that, the CEO also said that they have a very, very good chance at becoming the most important software company in the world, and explained that demand is unprecedented for Palantir's AI. He also announced two big catalysts that I think are going to be a very, very big deal that a lot of people aren't reporting on right now. One is a massive share buyback, one is S&P 500 inclusion. We are going to break all of this down, and I will put the timestamps down below. Okay, let's get to work. So markets bought up last week's dip this morning, and you saw a massive amount of runners as a result. We'll start with a previous runner that's trying to retake momentum, the Holy Tuppy McTupster. For context, we originally briefed on this one here, that Holy Tupster, at about 117 a share on July 24th as a short squeeze candidate, and it ran up to 725 at highs as of extended hours on Friday. My thought process in last night's video was that you'd see it cool off into the beginning of the week and then find a support level to bounce off of, and now it has indeed successfully done that, bouncing shortly after open pretty aggressively. The short squeeze setup on this stock suggests that if this continues the way that it is and the way that it has been today, you're going to see quite an aggressive, strong, and quite frankly nasty breakout past those previous cycle highs at 725. So be on the lookout for this momentum to continue through the rest of the week. This is a stock that we've been covering since very, very early on in the uptrend, and quite frankly, the setup looks as good as ever. In fact, with a short squeeze setup, the more that it goes up, the more likely you are to get a massive squeeze. And shorts haven't really started covering yet in any meaningful way. So by definition, you haven't had a squeeze yet. So if this momentum continues, it could be a big stinking deal. Obviously, you got to do your own due diligence, and you got to always play responsibly with clear entry and exit plans and clear risk management. But certainly one that you'll want to keep on your radar, especially considering the shorts shorted this at much lower levels. Next, one of our top ideas saw proof of concept this morning. SVFD ran up to 236. Yes, that's right, 236. For context, we originally alerted this as a top idea for ZipU members on May 4th at about 74 cents a share. We also did a full breakdown on the stock here on the channel. We presented the entire business model and why we felt it was a lovely and a great deal. But now you're actually seeing that real value that we broke down step by step for you several months ago here on the channel play out in the stock price. We put a lot of effort into all of our top ideas. We put a lot of effort into all of our videos. And while we're not always right, this is another example of a stock that we covered. We did a huge breakdown on. A lot of people said was a garbage pick. And then turns out yet another one has a massive run, justifying everything that we had predicted months ago. We called this out long before everybody else did. This morning, everyone's like, yeah, we saw this coming. Well, I don't know. Why weren't you talking about this back in May? Now, if you had happened to forget our top idea before today's run, well, we actually had your back too. We also briefed on SVFD at $1.16 a share this morning for ZipTrader U members, and it proceeded to run to $2.36 at heights. A total run of about 103% briefing price to highs just this morning. So even if you ignored all of our breakdowns in May and all of our updates, well, still, we once again reminded you this morning. So shout out to folks who did their due diligence on this stock and played it correctly and did well. This was a very, very similar situation to a stock that we were talking about yesterday that was a previous top idea that ran massively towards the end of last week, MF, Miss Fresh. MF had gone up some 284% on Friday, which was about 403% from the original top trade idea designation alert price, and it was just insane. This is yet another of many examples of why putting in the work and doing your due diligence pays off. It may not always pay off immediately, but it will pay off eventually much of the time. And we try to bring our best due diligence to members within ZipTrader U every single market open morning, as well as whenever we post a new top idea, which ZipTrader U members get first. Our goal is to present the best research that we know how to give you, which, by the way, cough, coupon code SQUEEZE55 will get you 55% off ZipTrader U membership, the one-time fee for lifetime membership, if you sign up before Sunday. The next top idea comes out this week, so you may want to sign up as soon as possible. Okay, moving on to the main entree today, let's talk about the tier of Palin. So Palantir reported earnings today, and boy, were they juicy. Juicy McJuicer. Palantir met Wall Street's extremely high expectations across the board, beat expectations on their latest forecast, explained that they will be eligible for S&P 500 inclusion soon, and they are also finally playing the Wall Street game and doing a massive share buyback. But before we get into this, I want to just give you a little bit of context on the situation with Palantir. You see, Palantir has a lot of enemies, a lot. Firstly, Palantir has about $2 billion worth of short interest, about $2 billion waging for this stock to go down dramatically. AMC, one of the most talked about short squeeze stocks on planet Earth in all of history, has only $800 million worth of reported short interest. Compare that to Palantir's $2 billion, and you could see there's a lot of money betting against Palantir. And we aren't even considering naked shorts on either. Now, as a percentage of free float, the short interest on Palantir really isn't even that much, at least to the eyes. It's about 7%. $2 billion may not even seem a lot compared to the market cap of Palantir, which is like $38 billion. But you got to remember that a lot of Palantir's float doesn't trade around a lot. A lot of it is essentially locked up. If it's not legally locked up, it's essentially locked up in the sense that people aren't trading their shares, they're holding them. A lot of people that have Palantir shares are just holding them, whether it's institutions or whether it's individuals or big whales. So essentially a lot of that float isn't even really trading, which means that 7% short interest may have the same effect of short interest that could be 30 to 40 to 50%, which means the more this goes up, the more short sellers get screwed, and means the more money is in making sure that the media says negative things about this company. And there's also a lot of people that have no real financial interest in seeing Palantir succeed or fail, but also just hate Palantir and everything that it does and everything that it stands for. A lot of that has to do with politics. A lot of that has to do with misunderstandings of the company. A lot of that has to do with the clients that Palantir has had over the years. The company does a lot of work with many U.S. government agencies that many riders and many other companies consider as politically incorrect or controversial. We're talking about ICE, we're talking about terrorism defense groups, we're talking about a number of other types of intelligence projects. At the same time, the people at the top of the company are very controversial themselves. CEO Alex Karp self-identifies as a socialist while also being a billionaire running one of the most influential AI companies on earth. You also have Peter Thiel, who is a big Trump supporter, which is of course on the opposite side of the spectrum. There's just so much material and so much incentive for analysts to find and pick apart bad things about this company. And we've seen that time and time again, quarter after quarter. This time last year when Palantir, the business, was growing massively, when they were putting foot to the ground to make sure that this entire ecosystem of customers and AI software was being developed when everybody else was sleeping on AI, well, guess what? Their stock price was going down. And the media spent their time saying how Palantir was going to zero and how you need to short it, and if you didn't short it, you were a moron. Just about a year ago, people were saying that Palantir was a simple get-rich-quick scheme for CEO Alex Karp, even though Palantir had been around for 20 years. People were saying that Palantir couldn't be competitive, that they wouldn't be able to compete with all of these other AI platforms, all of these other big data analytical platforms, despite the fact that Palantir has some of the most competitive relationships with both public and private institutions, and despite the fact that they keep retaining and renewing and growing many of these contracts. People were saying that Palantir would go bankrupt, yes, bankrupt, despite the fact that they have unprecedented amounts of cash on their balance sheet and very, very little debt. Virtually no debt. And now as Palantir has gone up, the media are rushing hand over fist and fist over hand to make sure that you remember that you should have been short this. Except that if you had been short this last year, you would have lost all your money. So just keep this in mind. If you're reading bad coverage on Palantir and you find that the coverage doesn't get better no matter how good the earnings are, well, this is why. There's a lot of hate against Palantir. There's a lot of money in making sure that this stops going up. And quite frankly, I think a lot of their competitors aren't so happy about them either. I wouldn't be surprised if they're pulling some strings to make sure that Palantir is viewed as a negative company. But anyways, let's talk about what's going on with this report. Let's start with the current numbers. So Palantir set pretty high expectations in their forecasts heading into this quarter. The last quarter, they were suggesting that they were going to have a really, really crazy year. And so far, they're meeting those expectations. Revenue was $533 million versus the $533 million as expected by analysts who were reading Palantir's previous reports. So no surprise here, but this actually includes a 13% total revenue growth over the same quarter last year and substantial revenue growth in both government and commercial segments. Earnings were 5 cents per share adjusted versus 5 cents per share as expected by analysts. Now, remember that earnings for Palantir are a choice. Palantir can move certain variables around and have a lot of earnings or have losses. If they wanted to, it would be very, very easy for them to just go ahead and gut the customer onboarding, the marketing costs, and the R&D for a quarter, and all of a sudden the earnings look fantastic, insane, wow. They don't do that because they care about reinvesting in the company, but nowadays, at least at the very minimum, they are playing the game a little bit better, in which case they are trying to report a little bit of earnings. In previous years, Palantir would undershoot and they just basically did not care what Wall Street thought of them. This year, it seems like they're doing a little bit different of a strategy, which is forecast strength and then meet that strength. Palantir reported $28 million or 1 cent per share in net income, compared with a net loss of $179 million or 9 cents per share in the year-ago quarter. So that's a really, really solid year-over-year comparison, and it's pretty clear that Palantir is willing to play the game if they're going from $179 million in losses to now reporting $28 million in net income. This is but a taste of what Palantir can do once they really, really start scaling their business model. Again, once they start cutting back on marketing expenses, really new customer onboarding expenses, and they drop that R&D, all of a sudden what's going to happen? You're going to see the full power of what a very, very, very widespread, powerful software AI company can achieve. The thing about software is, remember, once it's built, the profit margin is pretty damn insane. You look at customer count, you're up 38% year over year. You look at billings, up 52% year over year. Karp said that 80% of the business is growing at least 24% a year, with the exception being continental Europe, where the business is softer. But really across the board, I mean, Palantir has been progressing pretty aggressively, and we've said this quarter after quarter after quarter, although this quarter, they actually made some of the metrics pretty reasonable to appease Wall Street. But this is what I think investors are going to be extremely excited about here. They upgraded their forecasts, and again, they were already forecasting pretty strong numbers in previous forecasts. Now they're upgrading once again. For the full year, Palantir sees revenue of more than $2.2 billion. Its previous guidance called for revenue of between $2.185 billion and $2.235 billion, a range with a midpoint of $2.21 billion. Palantir now sees adjusted income from operations for the year of more than $576 million, up from a previous forecast of $506 million to $556 million. Now, I want to go ahead and talk about catalysts. So you have two major catalysts announced today, and very few people in the media are reporting on it. Some of the big guys are, but it's kind of quiet on a lot of those websites that, quite frankly, I think have very, very tight connections with short sellers. You probably know which ones I'm talking about. I don't want to say who they are. But anyways, number one, CEO Karp said that they are aiming to be included in the S&P 500, which of course would be a big boom to Palantir and screw over a lot of its haters. The requirement for this is being profitable for a year. Palantir has been profitable for 3 consecutive quarters. And then number two, they are saying they have authorized a $1 billion share buyback. Now, the reason for this, I believe, is because with the success of their newly launched AI platform that they did this year, and with the kind of demand that they are seeing, well, they see, and they're forecasting in the future, a lot more people going and buying Palantir stock, a lot more institutions adopting it, especially if they get that S&P 500 inclusion. And quite frankly, it makes a lot more sense for them to start buying back some of the shares, and then later on, if they want to raise a lot more money to do the next level of investment, the next stage of massive investment, then they'll be able to do it at much higher prices without still selling a lot of their float. So I think that's the play here, but it's very, very bullish and a very, very big sign of confidence for Palantir stock. Companies that are not healthy, like the media has been saying forever, don't do billion-dollar share buybacks. Let me tell you that. Anybody that says that they do just has no brain cells, really. Maybe they need Palantir software to analyze the brain to find where the cells are so that they can better use those instead of ones that they're using that clearly died 20 years ago. But here's the thing. Net and in effect, Palantir is now meeting its lofty expectations across the board, projecting it's going to get even better in the coming quarters through the end of the year. And again, they're likely to have that S&P 500 inclusion as a catalyst at some point, as well as the share buyback situation. So my question for you is, what do you think that the financial media and the hedge funds and a lot of Palantir's haters on Wall Street are going to make up next for why Palantir is a scam and going to go to zero? Let me know what your thought process is on that. Also, if you're somebody that happens not to like Palantir, totally fine. Let us know why down below, and be respectful of other people that may not like the stock. It's very, very important to have these conversations. It's very, very important to butt heads and understand what the weaknesses and the strengths are in any company that you're thinking about buying. Anyways, folks, that caps off today's video. Make sure to take advantage of that Squeeze55 coupon code before it expires at the end of the week. Lots of hot plays appearing in the market every single day. We're going to do our best to bring them to you in the daily morning briefings, including our top idea, which is coming this week. Have a good one, folks, and I'll see you in the next video. I appreciate the support.